this can at least up to, what we say here, 1782, right? So right now we're at 1762. So chances are we're going to go to 1773, 1782, and then potentially back up to 1798. But then when we look to the left, you can see there's this huge bearish candle here. So now what you'll find is you may be able to push up and fill this whole body of this candle. So erase these wicks, and then this candle now becomes your highway. So you're driving all the way up once we go bullish. If we go bearish, where are we going? We're dropping right back down into this area over here. From basically 1750 back down into the 1745 area or 1720 area at that point. So we're going to be driving up through that at that point. So it's just something to keep in mind, that when you actually see what's happening here, as soon as we get this bearish drop, once we start to go past here, we're starting to drive further down, filling this wick over here. But first we have to break through this level over here. Okay, so today's candle is going to be a little iffy. I would reduce my risk, take it easy today. Watch how the hourly is going to form. We're coming close to 8 p.m. Eastern, right? So you can start to see that we're starting to drive up a little bit. This might be short-lived, but more importantly, we might get a wick down and then continue to go further up all the way back to 1773. When we look across, we can see here, this is probably your first area of interest, right at about, on the hourly, 1770 at that point. So basically what you have is you have this dip down and then this drive back up again afterwards. But that then creates a little bit of a push up on your daily candle. That may then be just the beginning to further drop. So technically speaking, in this instance here with this daily candle, what I'd like to see is I'd like to see a pull down first if we're going to go up. So this wick over here, as an example, drives further down and then pushes up a bit more at that point. If we get the push up first and then the drive down, then we're going to continue bearish. And that's, fine. But what we're doing is we're anticipating both sides. So we're able to say, okay, at this point, I don't really have a clear direction, so I'm going to wait for confirmations. I can enter in my hourly, but these trades right now, like on the first couple of days, you're going to only take maybe 20, 30 pips out of the market because we don't have a clear direction. Come Thursday, Friday, or Wednesday, Thursday, Friday, you're going to have a clearer picture because we're going to have more daily candles and we'll be able to figure out where we're going at that point. And we're able to make adjustments and we're able to push up at that point. Okay. There you go. So that hopefully that gives you a little bit of information. At least use TradingView, bro, this ugly ass chart. Well, like I said, TradingView is useless. If I'm trading on MetaQuotes, why would I want to mark up everything on TradingView? That's useless. So once again, you want to waste your time on that crap, go ahead, be my guest. Can you show an entry on the 5 minute? Yeah, I mean, I can. We can go into the 5 minutes. I don't know how that's going to benefit you. I think this is the challenge with a lot of people when they say show an entry on the 5 minute. You have to understand your ranges. I don't know how. You have to understand what your targets are, right? So here's an example, okay? So here's a 5 minute chart, okay? So we're on a 5 minute chart. What am I hoping to achieve here? Okay, this is your problem, is show an entry. This could be an entry, right? This can be an entry. There's entries all over here. But the problem is, what is my range that I'm looking for, right? So if I'm going to enter over here and I'm going to say this is my range, right? So if I map this out and I say, okay, this I believe is a resistance level at 1765. I believe we can go from 1763 to 1765. So basically what you have is you have a 20 pip range, right? So this is, about or maybe 10 pips at that point. So yeah, we're at 1764, sorry. 10 pips at that point, okay? what I'm doing is my stop loss then has to go below this 5-minute candle over here. Okay, so now what you have is this is your stop loss, is basically 3 pips. You have a 3 pip stop loss and a 10 pip gain. So you're basically getting like a 2-to-1 risk to reward ratio, right? But I can't turn around and say that my range is up over here at 1767 if I'm doing a 5-minute entry, because if I'm expecting this to go up 30 pips, I know that there's probably going to be a lot more movement here, and I'm going to get stopped out more than likely, because this 5-minute candle can push up, 5-6 pips, and I'll close out in profits. But if I want to continue going up, just look at this as an example, right? Look at over here. So if I take a sell position right here, right, I drop down 4 pips, 5 pips, but then the next 5-minute candle, basically I go right back up 5 pips. And then I'm still continuing down, you basically get 10 pips. But there you're essentially saying this is the top of my range, right? And then I'm saying this is the bottom, back to my support, and I'm able to get 15 pips, 14 pips at that point. Okay? It's very tough to trade on this, because what you're anticipating we're going up, but then you have to be aware of when your candles are closing, right? Like we're coming in right now to essentially 8 p.m. Okay, so when we have this on 8 p.m., right? So we're like right now at 7:58 or so, right? So now what we're saying right now, this is not going to be a good time to enter, right? Because what's happening is the hour is going to be pulling back, right? And the next hour candle is going to be forming. So we don't know if this hour candle is just a pullback for your 4-hour candle, or if you're going to be turning around and you're going to say, okay, this is now the start of the push up, right? So now your hour candle will have to be pushing down to go further up. So that allows us to get your entry moving to the higher time frame here at that point. Okay, so what I'd be waiting for is I'd be waiting to say, okay, if this 5-minute time frame right now, we can wait. So let's do this as a live example. So this 5-minute time frame, the next 5-minute candle is going to start to move right now. Chances are it's going to dip, right? So it's starting to dip. So if I want to take a trade and I expect us to go up, I'm taking an entry over here, waiting for this candle to pull down. Why is this candle pulling down? This candle is pulling down because it's related to the hour candle, right? So when we go back and we look at how the hour candle is shaping, right, we know that we essentially need a wick similar to what we have here on the hour candle to drive us further up. We look at the 4-hour candle. You see the 4-hour candle finished bearish, so we have a conflict, right? So this is a problem for us, right? Our 1-hour and our 4-hour candles don't match up. So now I have to stay away from this because I'm being told right now that I do not have enough information. So if this candle on the hourly pulls up and then starts to drive down, that matches up with my 4-hour time frame, which allows me then to be more confident that we are starting to drop. But the way it stands right now, it's not making sense, because your last hour candle finished bullish and now we're starting to drop, but we have no upper wick here on the hourly, which is creating confusion because we want all our time frames to match up. And you can see here on the 30-minute, we have a clearer definition of the wick, but we don't have enough information to take a trade here at that point. Okay? So this is where people get confused because they say, well, the 30-minute looks like it's going to go up. The hour looks like it's going to go up. Great. But what does my 4-hour look like? My 4-hour looks like it's going to start to drop down because this 4-hour candle finished bearish, this finished with an indecision. We're going to potentially finish down. So I have to wait to get a little bit more information. So what I may do is I may wait for this hour candle to finish, bring us into 9 p.m., and then allow myself to take a position at that point. But if I'm greedy, or if I think that I'm able to figure out the market before it actually does anything, I can say, okay, I know right now that this daily candle is pushing up to potentially drop. So I'm going to take a buy at this point to drive up. And then what I'll do is I'll say, okay, I'm going to hold this, put my stop loss at break even or just above in profits. And then if it does continue to go up and I happen to be right, then we're going to drive all the way back up to here and I got it. But if I err and it does actually just wick up and then start to drive down, then I know I get stopped out and we actually have the official directional bias at that point. So sometimes you're able to, I guess, almost pull like a cheat code where you could say, okay, Ted, I'm going to take a buy right now because I see this hourly candle going up, and I can say, great. But you have to be aware that at any point, this hourly candle could turn and we could go bearish. But if we don't go bearish, you have a great entry driving all the way up to like 1767 at that point. Just for myself personally, I would rather wait to see more information. Because like I said, the daily candle can go both ways. You could have a push all the way up and then suddenly a wick is created and then we drive down. Or this could be the push and we could start to move all the way back up again. So it's just something that you have to be comfortable with. Myself, I rather wait for more information, right? You can see here, the 5-minute candles are starting to move. We got a little bit of here. So if you had taken an entry off your 5-minute candles here, you can see now that we're not, you'd be in profits. You wouldn't have any drawdown at that point because your 5-minute candle is starting to move. You're able to take a position. And if we had started right when this position, like right when 8 o'clock opened, you're up already 7 pips and you basically have no drawdown at that point. And what you're anticipating is this now 30-minute candle is going to break through this area. But I don't like that because this 30-minute candle could push up into this area here and then reject at that point. But once again, you can play both sides of this. You could say, okay, I'm going to take a buy and I just want to get right to this point over here. This is my target, right? So if I take a buy right over here, right? And I take it right, and I take it right up to this area right over here, you're looking at essentially, 10 pips, but you have no drawdown. Right? So at that point, you're good. And you could just turn around and you can say to yourself, okay, I took a trade with great risk management. But you can see what ends up happening, right? The candle's going to fool around with you and you're going to get stuck in this point. So this is why we wait to sort of get an idea of what's happening in the markets so that you can now start to see, okay, at this point, we may have created, our upper wick maybe a little bit to start to drive down. That gives me better confidence now with this driving through here at that point. Because now look, you have a wick here, you have a wick here, you're starting to drive down. That matches up with our daily candle here, and now we're starting to move, right? So this is where the importance of patience comes in, because now you can say, okay, great, if we're gonna go down, I know more than likely we're gonna break here. So now I can sit on this hourly candle at this point. I can sit on this hourly candle and I can sit and wait, and I can wait for this candle to drop right through at 1763, and then I can continue to let it drop a little bit more. I can now watch my 15-minute time frame, and this is a key here. On 15-minute, I can turn around and say, okay, this rejection here on the next 15-minute candle, I'm looking for a pop up again, and then a rejection, and then we're going to continue to move further down. And I can look for entries at that point on my 5-minute candles, because right now your 5-minute candle is starting to drop. So now my next 5-minute candle, I'd be looking for a wick up, and then I'd want to drive further down at that point. Okay? So this is what you're doing. So you're waiting because of the fact that it's a brand new market open. You have a brand new hour, and we want to see how all the time frames work together, right? This is what we're waiting for. So before, we saw that this candle was pushing up. So we're like, you know what? We could take a buy, but it doesn't look, that great. But if it works out, it works out. But here, what you're able to do is you're able to say, okay, now our time frames are lining up. This is our 4-hour time frame. This is our hour time frame. We could say that that last half hour was a fake out, similar to this hour fake out, similar to this one. And now we're continuing with that drop at that point. And now I feel more comfortable starting to do analysis to say, okay, at this point here, I'm able to say, as soon as we break this support, I want another test up and then a drop further down at that point. And we're going to 1762, which lines up then with the rest of our analysis at this point to drive further down. So you get a little bit more comfortable, and what you can start doing is you can start saying, okay, on the daily, here's a better shot of the daily. You can start to say, okay, this daily wick is going to fill. So more than likely this daily candle will probably drop over here to 1763, and that's 40 pips at that point. Okay? So that would help you out, and this continues to move down. But then what you have to keep in mind is as Asian starts to flow, you're going to get a pull back up, and then you're going to get a drop back down, and you're going to allow the London session to start. So that's going to give you information, and it may pull back a little bit more. And then obviously the New York session is going to give you your best volume with gold at that point. Okay, so hopefully that provided you some information. So it's sort of a walkthrough. So like I said, I wouldn't want to take trades at this point. Okay. I would want to wait. I would want to get a clearer direction, and I would just watch. When I'm getting rejections from the upside to drive further down, I can then start moving into the smaller time frames and take executions at that point. So as an example, if I want to execute off the 30-minute time frame, I can wait for the end of that 30-minute candle and the new 30-minute candle to start. I can jump into the 5-minute time frame with the 5-minute time frame open and the 30-minute time frame open, and wait to see the 5-minute push up to create the wick for the 30-minute time frame to then drive further down at that point. Right? Because exactly what's happening here, right? This 15-minute candle, right? We have an upper wick. Where did that upper wick come from? That upper wick came from this area over here. But the 5-minute candle doesn't have a rejection to the top side. So we're still generating a bias at that point, right? So now we're seeing this 5-minute candle start, and you're able to say, okay, at this point, if I have a wick here, that's going to give us a little bit more confirmation of this trade starting to drive down. Otherwise, we have to sit back and wait for a little bit more confirmation at that point. Okay? And as you can see, we flip bullish again. So once again, not a good optimal time to trade, but it is information that you can use to help you with your bias and say, okay, my hour candle now is starting to push. That's maybe the wick that we created to go up. So my next hour, right? If we're going to go look at my next hour at that point, it's going to drive further down, and then we should drive further up at that point. Okay? So as we start to create the bias in the new session, we're able to say, okay, push down, go up, next candle, push down, go up. That's what's happening here. So we have one candle push down, went up, next candle went down, pushed up, and now we're going to continue going up. So you can see the bias actually shifts a bit each time, and that's all we're doing. We have our bias, right? So I'm saying if we reject from over here and we drive down, I have sell opportunities. If we hold support and we drive up, I have buy opportunities. And at that point, I'm not really worried. I'm not confusing myself. I'm very relaxed. I've prepared for all the necessary outcomes, so I don't have to worry too much about, well, I didn't see that coming. It's now you've been able to put yourself in a position where you have all that information, and you can now just manage and execute accordingly and say, okay, this is what I think is happening, so I'm going to turn around and take this information and I'm going to use this in the next hour. I'm going to say, okay, at that point, like we'll do this.
right? So if I turn around and I say, this is my hourly candle, right? This is what we just saw. This is your 1 hour candle. I know that potentially a support is being built over here, right? A support is being built over here because this is your wick, right? So this wick is essentially your zone. Now I know that more than likely the next wick will drop down into that area, and we will continue to go further up on the next 1 hour candle, right? And we know each one of these hour candles is 15 minute, 15 minute, 15 minute. Here, I'll do another one. 15 minute, right? 15 minute, 15 minute, 15 minute, right? So 15, 15, 15, 15. So I know that this initial push down here is this section right over here is going to be part of your first 15 minute. So this drive down, I can watch on the 5 minute, and I can say to myself, okay, if this drive down is happening on the 5 minute, as soon as I get something that looks like this, right? That it looks like it's about to go bullish, I can now start executing on the 5 minute, and then that drives into the 15 minute, which drives into the 30 minute. And you know that the next 30-minute candle is going to drop a bit, right? Or the next 15-minute candles drop a bit, and then we're going to continue to move back up, right? So you guys have all seen this sort of weirdo pattern that does that stupidness that people talk about all the time. But that's sort of the idea of how you're building that hour candle, right? So once again, let's use this example. We're jumping in over here. We've got this hour candle moving, and here's our 5 minute candles, right? So what happened here on our 5 minute candle? So let's take a look. You can see here, this wick matched up with this wick over here. So now what we can do is we could say, hey, there was a bit of a support created on this 5 minute. I could take an entry, my stop loss is below here, and now I can ride this candle up if we're going on an uptrend. Remember what we were talking about. Because if we're going to drive down on the daily, we know that we're going to need a wick to the upside first before we start to drop, like we said, and we're able to say, okay, let's ride this up as high as we can. Maybe we're riding it up till this area over here, right? This wick over here. So like 1767, a wick gets created, and then we drive further down, right? Perfect example over here, right? We drove all the way up, and then a wick pulled down, next wick pulled down, right? Similar to what happened here, right? So all we need to do is we need to wait to see what happens at that point, okay? So the great thing about this is if this is going to start to push, we may get the next hour, this next hour candle driving up to this level over here, right? Because you can see it took 1, 2, 3, 4, 5 hours. We get 1, 2, 3 hours all the way back up. You're able to go right up to this level over here, and you're able to mark that off because technically speaking, all these orders are going into this zone over here. And if we break that zone, where's the next one? Right over here. So you're just looking a little bit to the left to see where the next possibilities are, you're able to go to at that point. And you're always aware of that. The problem is in the Asian session, you're always going to have a little bit smaller candles. So sometimes you might not break these zones and it'll be very choppy. So you have to keep that in mind as well. So your stop losses may be wider, still within proper risk to reward, but you're reducing your risk, right? So as an example, your next hour candle is going to drop down a bit. You're basically going to have have the wick as your stop loss. So in this case, this was 7 pips for the wick. And then your take profit's going to be a little bit higher. But what you can do as soon as you get out of this area, so as soon as this candle pulls away, you can now move your stop loss to this part over here, right? So before this was going to be your stop loss over here. This candle moves up. As soon as this candle takes off and this support is created here, or this wick, you're able to then say, okay, I can move my stop loss up. So what you would do is you would say, okay, this was my initial stop loss right over here as an example. So this one, my stop loss was here below this wick. Now I'm going to move it up to here. And as soon as this candle starts moving, I'm moving my stop loss up over to here at that point. And then I'm looking to the left and I'm saying, okay, my first challenge is going to be this wick over here on the 15 minute.
And once we break there, we're going to go up to here at that point. And then I can evaluate and I can say, well, there's a lot of wicks here, so there might be a potential rejection area. So what I may do is I might just close my trade at that point or move my stop loss up a bit, because essentially what's happened now, you've basically gained, at this point, 8 pips, right? So you've secured 8 pips. Now you're back up. This is 14 pips, almost 15 pips. I can now say, okay, I'm going to take this trade and I'm going to close it once we get to the top part of this area, because that will be the end of the hour or end of the half hour. And we know the next half hour could possibly push down. So you can see now things are starting to move up and we're coming into this zone. So this is perfect. So you reached your first target. You have a decision to make. You can say, okay, I'm going to hold this because we're still early on in the hour. And I think now my next target is going to be over to here. So I'm going to watch this and I'm going to have this push further up. And my target is coming here at this point. And once we get to that point, I know that there's maybe going to be a little bit of a pullback. So what I'll do is I'll basically close out my trade, take a percentage, do whatever I do in terms of managing risk, managing my trades, whatever. But I've made it to my target at this point, right? Because we had the rejection over here. The next 15-minute candle started. Support was held, right? We got that little tail. We don't have to worry now. This is probably not going to come back. And now we're able to say, okay, we've reached our target. We're coming up to this target over here. I'm good with taking profit at that point, because essentially right now, this candle in 5 minutes has moved up another 10 pips. So you can see how quickly, when you start to look at what's happened, you're getting positions on the smaller time frame. You're not having drawdown, right? So you're not worried about your risk to reward, because right away our risk to reward we were already in profits at that point. We're able to take that trade and we're able to push all the way up at that point. And we've made it to, once again on the 15-minute time frame, we've made it to this level over here, which technically could be a little bit of an issue because we can see there's rejections, right? So we don't want to fight these rejections. Hindsight's 20/20. If you're going to hold this trade now, you got to move your stop loss back down here, right? But if you want, what you can do is you can essentially say, okay, I'm going to take half my position off the table, leave my stop here, and see if this can push. Little hint, chances are it's going to continue to push because we're coming close into the end of the 30-minute candle, right? So now we go to our 30-minute candle, and now we can see here the 30-minute candle's got some legs. It's got a nice clean rejection. And now you can see chances are, where are we going to? Our target is going to blow past this little area over here, and our target is into these strong candle bodies right over here. So that's what we'll be waiting for. But we did the damage that we needed to do at that point. We made it to where we needed to be because we know the next 15-minute candle could potentially pull back down and then drive further up at that point. But we don't need to do that because our target was right over here. We achieved our target. We got 10 pips, 11 pips. You're done for the day, right? You're done at this point. You're done. You don't have to worry about the rest of the move because you planned for that move. This had no drawdown. This was a perfect trade. And basically right at 8:20, that's basically pulled all the way back. Why? New 5-minute candle. Right? There you go. So there's your new 5-minute candle pulling us back. Why? Because we're coming close to the end of the 30-minute candle, right? So this is going to pull back to give 30-minute candle time to breathe. And as it starts to pull back, now the next candle is going to start to drive further up, right? So this is where candle timing and candle closes are important. We already anticipated this because we said on the 15-minute time frame, this was going to be an issue. We have rejections here, right? These are rejections. So why wouldn't we get a rejection over here? We have to anticipate that. And that's the key when you start doing trading like this, is anticipating each level. Now, when you dictate probability, you're going to say, hey, this is still a fresh hour candle, so there's a lot more push coming. I know that. But if I just wanted 10 pips, I could close. If I want to continue going up, I'll wait for this 5-minute candle to give us a little bit of a wick like it just did. Perfect. Now we can anticipate this 5-minute candle is going to go further up now, because why? We got a little bit of juice and it's getting ready to push up through that level. So now we just sit back and wait a bit. But more than likely it's going to continue, because now we're starting to get ready to push through here. And where's our target? Further up over here at that point. Okay, so this is how you would manage those trades, and this is how you'd be able to say, okay, I'm comfortable with this if we're going to reject. If not, I've taken my 10 pips and called it a day. So in hindsight, you're able to manage your trades accordingly, watching these time frames. And as the time frames start to expand, you can say, okay, this is what's going to happen as we start to move through the market at this point. We know we're coming close to the end of the 30-minute candle, so there's going to have to be a pullback, right? If we go into our 30-minute candles, like we're in our 30-minute candles now, you can see there's always a wick on the upside, always a wick on the downside. So we know that there's going to be a pullback, right? So you know there's going to be a pullback here just from probability. Look, every single 30-minute candle, except for this one and maybe this one, has had a wick. We've always had a wick. Right? There's always been wicks. So where do those wicks come from? They have to come from the end of the candle closing, right? When is the end of candle closing? The end of candle closing is the end of 30 minutes. So more than likely, the last 5 minutes of the candles, right? The last 5 minutes, we're going to have a little bit of a pullback. And this is where people make a mistake, right? They're not taking that into consideration, right? So now this candle is going to pull back, your next one's going to pull back, and then 8:30 could potentially drive further up at that point. But you have to be aware of these things. So as you come close to the end of this candle, the 8:30 candle, you can then say to yourself, okay, you can close as the 30-minute candle is about to close, right? So as this comes through, right, we're at 8:24, jump into my 1 minute time frames, right? I jump into my 1 minute time frames. What do I have here on 1 minute? Okay, if this 1 minute holds support, chances are now we're going to continue to go up and we're going to finish off this on the 1 minute. Okay, we're going to push up because we're coming close to the end of the 30-minute. So we may get that one final push a little bit higher. At that point, you can start to see the 1 minute candle starting to move. The next 1 minute candle moves, and that's coming close to the end of the 30-minute candle. So this candle starting to pop. We've got a little bit of a support here on the 1 minute, right? So we're saying to ourselves, providing this 1 minute support holds, we're moving up. That matches up then with our next 5 minute candle. And you can see now the 5 minute candle just started. This took a breather at 8:20 to 8:25. This is your final push for the 30-minute candle. This is decision time. This is decision time. You have to decide at this point, I'm going to close as we come close to the end of the 30-minute close, or I'm going to leave this run. Myself personally, I would like to get out probably right in the next minute or so. Right? So if I was trading this in the next minute or so, I'd probably exit. I'm not looking to hold this a little bit longer. I would just get out in the next minute because we've already had a bit of exhaustion. This will give you one final push. Back to the 1 minute chart, you can see we're still getting exhaustion right in this area over here. So you can start to see it's getting a little slow. So at this point, I think we've gotten all we needed out of this candle. If I want, I'll move my stop, right? We had our stop over here. Maybe it was this one. I'll move my stop up a little bit more on this 1 minute candle. Let it go a little bit higher. If it does, great. If not, I'm happy at that point. I'm happy that we moved to this level. You can start to see here the 30-minute candle is still relatively strong, right? So we're still moving up. But what I don't want to get is I don't want to get our next 15-minute candle driving down. And this is what we're going to see. So let's take away that line there. And let's see how this 15-minute candle finishes. It's pulling back, right? So we're pulling back at this point in the next couple of minutes. So you're going to see a wick form. So we're going to get a wick right over here at this point. So let's wait and see. We're going to have a wick in the next minute or so, and then a pull back and a continue at that point. Okay. What broker allows this tight trading? Well, I mean, this is just an ECN broker. Okay, so let's just wait. You can see the 5-minute candle, support was created, holding here, and we're just holding, right? We're just holding here. So you know that this is the last 5-minute candle of your 30-minute candle. We've probably got as much juice as we can out of this candle. So here's where I would close. I would say, hey, we got back up to this level here. It doesn't look like we're doing much more. You know what? We'll take the close, be done with it. And then now you're going to see in the next couple of minutes, we're going to pull a little bit further back at that point. So let's wait to see what will happen in the next couple of minutes. You can already start to see we're having struggles here, which is perfectly normal. We're going to have struggles here because of the fact that we're closing in on our 30-minute candle. Our 30-minute candles coming to our close. Our 5-minute candles, you can see, are starting to exhaust. Why are they starting to exhaust? Is because of the fact that we're coming to the end of the 30-minute close, right? So this is always going to happen. And once again, why is this happening, right? Why is this happening? Because the 30-minute candle needs a wick, right? Because why? Because most 30-minute candles have a wick. That's all. We don't know why. We don't know why this is going to happen. We just know that it happens the majority of times. This is a key. You don't need to know or understand why this is happening. You don't need to know why this is happening. You just need to know that it can happen and how to anticipate avoiding it or playing with it, right? That's sort of the key. I think a lot of people want to solve this and say, well, what if it doesn't have a wick? What if it goes up here? What if it does this? Just look at probability. Look at the overall probability of this happening. And you can see this is the reason it's happening, because we can see on other candles, the same thing has happened at that point, right? Wick, 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 right? So chances are there's going to be a wick over here, right? So we're going to get a little bit of a wick. So we're coming in, it's 8:29. So you got your 1-minute candle. We blew up a little bit past the 1-minute candle. Here's where you could take a close, right? So right at this point, you close. Take the close. I'm done. My 30-minute candle closed. It's about to close right now. Let me see here. Market watch. Yeah, we got 5 seconds. 4, 3, 2, 1. All right, so new 1-minute candle starting now. Okay, so now we go back, start again, right? So we start over here, and now you can start to see what's happening, right? So this is your new 15-minute candle right away, starting to pull back. So we just let it pull back again and just sit over here. Let it pull. It might pull all the way down. But the key was you closed right at the end of the 30-minute candle, so you don't have to worry about this anymore. Right? You don't have to worry about this candle anymore, because this candle can pop further down. It can drive a little bit. It can then push up a little bit up, whatever you want to do. But the key was you closed at this point. If you kept it open, what you'd have to do now is you'd have to look over here, right? You'd have to say, okay, if I kept this trade open, right, my stop loss is now up over here on the 5-minute candles, right? And what I'm hoping for is this 5-minute candle drops back into this zone here and then drives further up. If not, it continues going. That starts our new 15-minute candle. And now we look for targets again to the left, right? We say to ourselves, okay, where's our targets to the left? Okay, we're right over here right now. Chances are this next 15-minute candle, if we get a drive up, we'll come up to this target over here. Okay? So that's what you're trying to do. So we can sit and let this wait, marinate, do whatever it does, but that's basically about it. But you can see here, okay, perfect. So we got the drop that we were expecting, right? New 15-minute candle, pulling back. So you can see here, going to the 5-minute. Remember we had our little support area right over here? You're right over there at that point, right? So you're saying, okay, find this and break. But the key here, perfect example, now you can place trades above this area over here. So you could say, okay, I'm going to place a buy stop above this area, knowing that this 5-minute candle is now the new wick for that 15-minute candle. And if it drives up, it's going to push all the way up through this, right? Because this is the first 5-minute candle. Look at the 5-minute candles for the previous 30-minute, right? You got 1, 2, 3, 4, 5 candles, whatever. Now you know that this is going to push up. Wait for this candle to push, and then your stop loss is right over here. So basically what you can say is your stop will be, 6 pips, right? Because you're working off the 5-minute time frame. And where are we going? We're going to our 30-minute time frame. So we have 6 pips is our stop. So this is where our stop's going to be, right over here. Actually, sorry, let me do this. Our stop loss is going to be right over here, right? 6 pips. But then our take profit is going to be here. We've got 8 pips at that point, right? And that's just providing this doesn't drive further down. And also at the same time, keep in mind, this is a key. This is your key. We're not taking the trade right now. We're taking the trade once this wick is formed and it pushes up. So we've already gotten out of this area to drive up. So your stop loss may not even have to be down here because you haven't taken the trade yet. You're waiting for this to flip, this wick to form, and then to drive up, and now you'll have liquidity to drive up there to grab 8 pips. So you might find that this wick doesn't even make sense, right? You don't even have to have your stop over here because your 5-minute candle, as soon as it drives up over here, you're already out of this area. So you don't have to have your stop there anymore. Your stop, you can eventually move it up, say over to here, or even over to here, because this candle here, this 5-minute candle or the next one will have created that push up. So this is where when you start looking at time frames and you start looking at potential trades, you're saying, okay, well, Ted, you said it was an 8 pip, 8 pip reward, right? So this is a reward and it was a 6 pip risk, but this is the maximum. This isn't what you're aiming for, right? Because perfect example. So now this candle started to push up. Perfect. So your trade would have executed, right? So now your trade would have executed and you're starting to drive up. You're out of that wick, right? This wick has now been created. Now we're just waiting for this to start to push, right? So now you've taken a trade and it's at break. It basically is in somewhat a break even or somewhat small profit, but your chances are you won't go back down to this level because we've created the downside to drive further up. Why? The hour candle is pushing up, right? So we have the hour candle pushing up. Where is it going? It's going through this level over here, potentially up to this area over here, right? Our 30-minute candle now is starting to get momentum to drive further up, right? So we've got that. So now you have your time frames lining up. And you can say to yourself, okay, perfect. This 30-minute candle now has a body, has a wick from the downside, and going back to our 15-minute example, right? We were saying where were we going? We were going up to over here. Now you can start to see we're starting to push at that point, but we don't have to worry about our stop loss because now our stop loss can be tighter because chances are we're not going to drop back down. But if we do drop back down, we only lost 2 pips or 3 pips. We didn't lose the full 6 and we're going up for 8. So there's a higher probability that we're going to drive further up before we go further down at that point. Okay, so now we can watch this candle and we can watch the 5-minute time frame and you can see this 5-minute candle finished bullish with a wick to the bottom. This candle will probably wick again and give us a little bit more at that point. It'll give us a bit of a drive up at that point. Okay, and we got stopped out. There you go. So there's your stop out. All right. Can you explain what to look at when you said check the 100 days same candles? Exactly what I'm just doing here. That's what you'd be doing. Okay.
Can you save this live? No. But you can see, I mean, with that trade being stopped out, it didn't cost us anything, right? We were on the 5-minute time frame. We're trying to execute. You're not holding a huge drawdown. You lost 2 pips, right? You could have, you lost 2 pips. It didn't cost you much. But then the difference is that'll happen, in terms of positivity, that'll happen more often than not, where you get that trade. But at the same time, if that wick then is created and we see that it drives up again, we could re-enter that trade with the same idea at that point. Evaluate the 5-minute time frame, evaluate the 30-minute, the 15-minute, and if we have that wick to the downside and we start to drive up bullish, take another trade. You can now take another trade to gain 8 to 10 pips, and you've only risked 4 pips at that point. Okay? So that's about it. And hopefully everyone enjoyed that, and good luck at 9.